Why, just why did I not buy this token over here? Everything is down, Pi is up. I think that's the wrong way to think about this. If you've got a diversified altcoin portfolio and that portfolio is now down, even if it has some Pi in it, that will not make up for the losses. So it's very important to go with the macro picture, not to be too focused on individual asset selection. Because let's be real, we all know this. We all know that assets are highly correlated. When asset A is going down, asset B is going down as well. When asset C is going up, then asset D is going up as well. And of course, Bitcoin and Ethereum is leading the pack. When those assets are going down, then all the rest goes with it. Of course, except Pi, but who cares about that? Even if you owned Pi this week, there is no correlation to today's performance, right? Today, Pi is also down. It's down like all the others. We can barely find it. It's over here, minus 13%. The market sentiment is clearly changing, and it's not just changing within crypto, it's changing across all asset classes. Have a look at this. What we've got over here are long-term government bonds, or to be more precise, an ETF, an exchange traded funds on long-term government bonds. Since the middle of January, those go up in price by more than 10%. And usually those bonds tend to go down over time. Or have a look at this. This is the gold price relative to the S&P 500. How does gold perform relative to US stocks? And that's also up 13%. And that's already happening since the middle of November of last year. Or have a look at this. This is just recently the Nasdaq 100. So the technology stocks, they also start to correct. Not that much yet, only by 7.5%. But stocks like Nvidia, for example, are already down 20%. Maybe this is the beginning of something bigger. During COVID, the Nasdaq 100 went down by 30% almost. And during the contraction in 2022, the Nasdaq lost 36%. So this might just be the beginning. Now, why am I so bearish in the last weeks? I get these comments quite often recently. This is the most bearish YouTube channel in all of crypto, in all of finance. But I simply try to look at the data as objectively as possible. And when we look at the very long-term data, things don't look that great. How else can we interpret something like this? This is a chart that starts in 1871. So this is almost 150 years of data, a bit more than that actually. And it shows us how expensive stocks are. The current market cap of the stock market relative to the earnings of the stock market. What is that ratio? How expensive are the cash flows that we are buying when acquiring a little piece of a company? When things are very cheap, we can buy a company on average for only 6 times its current earnings. When they are expensive, it's 37 times. So we need to wait 37 years with the current earnings to get our money back. And that would assume 100% dividend payout, which of course never happens because we've got reinvestments as well. But still, right? This chart is useful because all of those price charts, they distort the picture, right? Because the money supply is expanding over time on average by 5.8% per year. And so we can't compare dollar to dollar on those very long-term charts. We have to look at ratios where we have the dollar devaluation already removed. And since the current market cap and the future cash flows are both exposed to the same money printer, we are dividing dollars by dollars. This is a somewhat constant ratio. At least it should be. And now we are very high, right? This was the .com bubble burst. This was the global financial crisis. And maybe the future bubble burst will be the AI euphoria burst. Who knows? Artificial intelligence is useful, as of course also is the internet that was hyped in the year 2000, but it's always about the price, right? Is the price justified? Are the investments, the size of the investments justified? And that apparently was not the case with the .com companies or subsequently with the properties. Or how can we argue against something like this, right? This is the publicly traded stock market cap relative to the US GDP. Also extremely high historically. How can we, with good faith, have most of our money in very risky stuff like technology stocks and Bitcoin when things tend to be rather expensive on the historical scale? This is the average cost basis of the market. So a psychological anchor point, at what price price did the market on average get their Bitcoin for? And the best time to buy Bitcoin is of course not at 100k, it's always after a correction. It's always when the current price is below the average cost basis. That's when the selling pressure tends to subside. That's when we want to be in the market. Unfortunately, right now that realized price is at $43,000. I'm not saying that we're going there tomorrow, but I'm simply saying that currently is not an extremely cheap time to buy in the historical context. Thus, we should not have an extreme allocation to Bitcoin or to tech stocks. I'm also not advocating for not having any allocation whatsoever, but I am allocating for having maybe less of an allocation now compared to when we are below the realized price. Because this is the problem that most people have. Most people will not buy when we are at 40k or maybe even at 30k in Bitcoin. Most people will at that point call Bitcoin a scam. Very few people will follow Bitcoin prices still because the media won't talk about it, because the YouTube algorithm won't show crypto videos. So very few people are still following crypto. Very few times I get requests at that time from complete strangers whether or not it makes sense to buy Bitcoin. Those questions always arise after a rally, and that's then the time to sell, right? You want to buy when there is very little attention on crypto. You want to sell when your grandmother suddenly asks you about it. Of course, you can also just buy and hold and go through those 80 or 70% corrections. That is valid as well. And if you buy now and you don't look at your Bitcoin for the next 5 years, that is a legitimate way to make money. I'm not saying that that's a bad idea, but if you want to manage your capital somewhat, if you want to ride the waves somewhat, if you don't want to see those kind of drawdowns, then it might make sense to be over allocated when we are below the realized price and to be under allocated when we're already multiple X above that realized price. Currently, the net unrealized gains are still at 58.8%. The market is still in gains. It does not look like this, right? It looks like everybody is losing. And all of the short-term traders and all of the people that bought AI tokens and that bought meme coins, they are of course in the losses. But among the long-term investors, right? Among the Bitcoin investors, people are still in unrealized profit. And you want to buy ideally when even those people are in losses. This doesn't happen often. It only happens every few years. But when it does happen, it's time to really load up. Now, this channel has been around for a while, and I've been in crypto since 2018, and I've seen my fair share of bear markets, and I see it time and time again. Very few people are going to follow this channel during the depressed times, but that's the minority that in the end makes the money. It's not the people that buy now when the crash has just started after a very massively euphoric rally beforehand. It's not just time to buy when there is blood in the streets, because that's very hard to tell, right? It's time to buy when there is apathy in the market, when the people don't even want to look at crypto anymore, when all of the attention is pretty much at zero. That's when you want to buy. But again, it's not easy to buy at those times because you're probably not even thinking about crypto when it's continuing to fall all the time. You're probably just focused on other topics in your life. Can we really argue against charts like this, for example? This is a long-term Bitcoin chart, and it connects the bottoms and the tops. And I know this is not scientific. This is simply just curved lines on a chart, and those lines aren't even parallel. It tends to get tighter and tighter over time, but still, right, it doesn't look like the current reward versus the potential risk is really worth it. There is definitely some more downside, and I know this is not the message most people want to hear, and that's why most people don't watch this YouTube channel, but why the channels that always say buy now, it will go to the moon, why they get more likes, more reach, etc. It's simply because that's the message people want to hear. The confirmation bias is too strong. Here on this channel, I think more long term. I'm simply hoping that some people still remember and still stick around. They still remember that I was warning about this crash, that I was selling first at 72k, then afterwards at 100k, and that then I said, please take profit if you're currently over allocated. The issue with that message is, of course, that it does get thumbs down and also negative comments, unfortunately. More on that in a second. And so then the question is, Gerhard, what should I buy, right? I cannot just hold my money in cash because money inflates over time. The problem is that there's debasement. We get less and less for our hard-earned US dollars if you just keep this in the bank. And that argument is totally valid, right? The US money supply grows by 6.8% per annum, and having your money just in plain old cash without any return whatsoever is a problem. So at least get some kind of return, right? At least get some fixed deposit, get your 3% and protect yourself a little bit against that expansion. But also try to find opportunities that might still be cheap, right? Just because there aren't a ton of opportunities out there, just because not every stock is super cheap, does not mean that there is not potentially one property somewhere down the road where maybe the seller is in somewhat of a hard spot and is forced to sell the house. Maybe there are some good opportunities somewhere still. I've shared several times on this channel how I'm following the 120-day simple moving average, right? How I take this very seriously and how I tend to sell whenever we fall below. And this time, this moving average again has rescued our asses. But just because we are down doesn't mean that we are already at maximum fear. It seems like people are now very fearful, but they're not yet maximum risk off. Because have a look at this chart. This is the stablecoin dominance. So how much of the entire crypto market is now in stablecoins, or is rather on the sidelines? So this is the real measure of how frightened people are. When there is 19% of all of crypto in stablecoins, that's when you want to buy. When there's only 5% of all of cryptocurrencies market cap in stablecoins, that's when we want to sell. This was at 72, 73k. This was at around 100k. Yes, the market has obviously already moved to stable coins and it is more risk off compared to just a few weeks ago, but we are not yet at the peaks, right? We are only at 8% and the peak is at around 19%. We can, in theory, still fall way, way lower. I don't have a crystal ball either. I have no idea where Bitcoin's price is going. I have no idea where the stock market is going. I'm simply just looking at valuations and I act with my portfolio allocations accordingly. If valuations are low, if Bitcoin is below the realized price, I want to have a lot of allocation towards Bitcoin. If stocks are low, if the Shiller PE ratio is only at 20 or at 15, then stocks are cheap and then I want to have a lot of allocation towards that. I don't want to have that much allocation to either of those two if my measuring sticks for those asset classes ring rather problematic signals. I don't want to buy too much. I don't want to have too much exposure during times like this. It still makes sense to time the market with the weighting in a portfolio. We don't have to buy 100%. We don't have to sell 100%, but at least we have to adjust our portfolio weightings according to how we see the market right now. The idea of just having a fixed percentage allocation to any asset class, I think is wrong. I think it's better to have more allocation when things are cheap and to have less allocation when things tend to be expensive. And this also helps us mentally, right? This helps us with the idea that we don't have to pick the perfect top or the perfect bottom. We simply just act according to where we currently see the valuation going. Now, unfortunately, the YouTube algorithm does not support true talk like this. The YouTube algorithm supports the people that always push the positive narrative, no matter if you get wrecked with that. Besides that, it's also hard for a YouTuber to say the truth because to a degree it also goes against our interest, right? If we say that we believe that prices are going down, then people are probably not going to be as likely to buy our premium services or to be more interested in crypto, right? They're rather leaving. But yeah, have a look at this, right? This is a comment. He is creating fear, uncertainty, and doubt. Were there any strong indicators to sell Solana when we hit $290? And yes, there was actually. I was very bearish on Solana as well. I made several videos on that as well. Feel free to check out the history of this channel. But the issue was that Solana's dominance was very high. Have a look at this comment. You are way too bearish. The biggest bear on YouTube. If you think the cycle is over, you don't understand charts, data, and the cycle theory. 95% of on-chain metrics show that the market is nowhere near the top. It would be hilarious if altcoin season started right now. So those are the kinds of comments you get, right? Nonsense, etc. I'm asking why and no more further reply, right? Stop the FUD. And the issue is, of course, how to transport that message, right? It doesn't feel that great to say, I told you so, especially if those kind of people lost a lot of money with this crash. There's some kind of a fine line of how to properly transport this message. I think I'm relatively strong in the analytics. I have been able to buy low and sell high repeatedly in crypto, but transporting this message in a way that it also reaches people that are not yet considering these kind of data points, that's the hard part. Now, before you subscribe over here and before you leave, I want to talk about one more thing. And again, it's one of those moments of I told you so, but I really don't know how to better communicate this. Here on the 25th of February, so 3 days ago, I made a video. I am selling aggressively. The bear market might have just started. Now, this is a premium update, right? So every 3 to 4 days, I make premium updates. And before that video, I also posted over here. They closed a day below the 120-day simple moving average, and how I've sold all my speculative Bitcoin, how I've also sold all my altcoin positions, and how I've opened a short position. I'm shorting a lot of assets now. I'm actually making money with this crash. Again, potentially problematic, right? Other people lose. I'm now winning. But again, it's player versus player. And I try to build a community of winners. So if you want to make money during this bear market as well, right? If you don't want to be the tourist that lost once and then leaves and then forgets to buy when it's low. If you actually want to be better than market average, then feel free to check out premium as well on this channel. So it's up above, thebitcoinstrategy.com. There's also a 1-week money back guarantee. You can watch all the tutorial videos. You can learn all the shorting ideas, all the portfolio risk management ideas. You can watch more than 100 videos risk-free. If after 7 days you think you haven't learned enough, then there is the 1-week money back guarantee. So I refund you 100%. There's really zero risk for you. Simply just message me. So again, looking very much forward to seeing you again in YouTube. Also looking forward to seeing you in premium. Cheers.